Hello, welcome to the stream. It's been a while, huh? Yeah, God, y'all can't believe this has been this long. I'm so excited. All right, so pretty much, what are we doing in this? So we're gonna be reviewing. So if you guys don't know, I have a service where I help people get loans or go through me to get loans, and I do that through doing a loan approval probability. And if you want to go ahead and get this done because you're looking for a loan, go ahead and contact me. Put text in the comment section, and I'll provide your phone number and schedule to go ahead and schedule me in. So this person is looking for a think it's like $5,000 loan, and they told me they wanted to go ahead and do it for to go ahead and get started as a streamer. So we're gonna see if we can help out here today. We'll see if we can help out. So give me a little moment. Let me get started here and or get everything set up, and we'll be able to help, or we'll be able to go ahead and start. While we're waiting, if um if you're a credit repair company, this is a service I also offer to you, business to business. We're using my system can go ahead and help you also with your clients to get them loan approvals. So let's if you want to contact, go ahead and hit me up. You can always email me at George, Jorge, the credit expert at gmail.com, and we can go ahead and get locked in together. So give me a moment. All right. Okay. All right. So this is what we're going to go ahead and be doing today. We're going to go ahead and be reacting on this loan application that we're going to review. I'm going to point out the details, why I wouldn't. I want you guys to put it in the comment section to see if you guys would also go ahead and approve um, this loan yourself. Let me know. So, uh, without further ado, let's lock in. Let's lock in. So let me get this application pulled up and we'll go over it together. Sorry for the shake and bake. Ah. And do not be afraid to put your questions below. Any questions you have about wanting to fix your credit or trying to get approved for a loan, go ahead and put it in the comment section. I will get to it. So, yeah. Boom. All right, let's see. Sorry, should have been a lot better prepared. Yeah, that's neither here nor there. Give me like less than 2 minutes, maybe less than a minute, and we're gonna be ready. Cause I have the credit report. I just need to get the loan application pulled up. All right, let me know how the stream is going because sometimes stream be messing up. Ah, ah, yes. All right, we're about to lock in. Let's go ahead and get started. Okay, perfect. All right, so now you should be seeing this loan application. You should be seeing this loan application on the on your end. actually go ahead and close this. Let's see if that is ruining it. All right, here we go. So again, this person wanted X amount. So let me see, how much is it? It was somewhere down here. Oh, they wanted 5,000 for investment. So let's go ahead and lock in. Okay, so we're starting off with here. So this is the loan application I have my clients fill out. The purpose is to simulate a real lender. I am a person that is in the inside. I get paid by a financial institution to make these decisions. So we gotta go ahead and mimic all of it. So here we go. So residents, their owners, how long have they been there? 2 years. What's their housing expense, either rent or mortgage? That's gonna go ahead and be 2,500. They're self-employed. They're owner, CEO. They've been doing this for 5 years. Okay, I see you, gang. They pay themselves 7,500. It's almost about close to 100,000. Oh, let's see, 75. There we go. Shit out here embarrassing me right now. The fucking number locking that on? Like, what the hell we doing? Out here embarrassing me. Okay, let's go. It's about 90,000. I was close enough. Stop playing with me. Let me know how the chat is going, or not chat. Let me know how the stream is going. I have no idea, but I do have the chat pulled up. Why is it having me sign in? I hate this. All right. Let me see. Now I have access to the chat. All right, let me know how things are going in the chat. All right. So, okay. So anyway, so I make $90,000. Their CEO didn't really put, which is fine. I don't really care. They did send me their credit report. That's beautiful. They're asking for 5,000, 3 years. It's for an investment. Like I said, their score ranges between 640 and 679. We'll see if that's true. We're gonna have to take a look to see if this is really true and dead ass, because not everybody always seems to know what their credit score is. So, all right, let's continue. Okay, so okay, they put currently past due on any loans now or in the last 2 years. Yes, yes, no. Okay, outstanding collections you owe. Yes. Have you ever filed for bankruptcy? No, no. Are you currently in bankruptcy? No. Any loan inquiries from? Okay, no. We're gonna double check. Okay. You know, this is a little. Okay, perfect. All right. Let's go ahead and react to this credit report. Okay. All right. So right here is a credit report. As you can see, I'm gonna go ahead and be breaking this down very easily to go ahead and see. So far, what we know about her is she needs 5,000 for investment purposes. She says that she has a 679. I can see she has a 726, and she's trying to get money to get her approved. Let's see if we can get her locked in with either me, my lender, or other lenders within my network. Tap in if you need help getting a loan. I'm your guy. Let's hop into it. Okay, so let's take a look here. So what I'm gonna do is I'm actually gonna take a screenshot of what I'm looking at. Da 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 da. Okay. All right. All right, let's dig into this credit application. So, again, she's been in business owner for 5 years, so I'm going to need her taxes. Or she's going to need to provide me with how much she made. And looking at the loan application, we already got it down. So, let's take a look here. So, she's a 700 credit score, which is nice and all. That's always a good thing to go ahead and see. And how can I tell to 700 credit score? We're going to take a look. We're going to put a circle right. 7 right here. FICO, as you can see. Boom. Their 700 credit score. Okay, they are busy. Okay, so they've had credit since 2024. They currently, I know this says 30%, but this is how much they have left. So they have 30% left, which means they've used 70% of their credit. They have about $18,000 of credit card debt, 15 from installment debts. They're paying about 723. It looks like is an estimate of how much they're paying all their debts together. Okay, normally this gets at least, I think it's like 5%. This is the Amex credit card. Anyway, okay, perfect. So far, what do we know so far right now? That she's a 726 credit score. She opened up her credit or start credit around 2024. She has about 70% used on her credit card. She has $18,000 of debt, and she has $15,000 of installment loans. Installment loans are like your autos, personals, anything that's set that you pay always constantly every month. Not like a credit card, because you can pay off a credit card and not pay next month, but pay the following month if you use it, right? So that's the difference between installment and revolving. So let's look. So far, what am I building in my head of this person? Okay, so they're an owner. They make 90,000, which is a pretty good income, especially in this economy. You gotta try to be winning somewhere, right? So let's go back to that application. So let's see what's positive. What's happening positively with this person? Okay, so we have uh, they're stable with their home. They've been there for 2 years, which is good. We know they ain't going nowhere. That's right. So if we need to track you down and get our money, we gonna hold that. We gonna get that, and we gonna hold that. So okay, so let's say, all right. I just want to make sure the speaker's picking up the sound. Okay, perfect. So that's good. She's an owner. A little risky when it comes to owner, I'll be honest, because again, your income fluctuates a lot since you are an owner. Also, there's an owner between. There's a difference in between being an owner um, when it comes to owning a convenience store as opposed to owning a Walmart, right? Those are two different scales. Like we wouldn't really have a problem if we were reviewing Walmart because we know they're everywhere. There's a lot of social and financial proof when it comes to these type of loans, or not these type of loans, or financial and financial proof, right? With one store, there's a little bit more risk when it comes to that. But the good thing is they've been doing it for 5 years. That's a whole. It's not like a business they started within like a year or two, right? So that's positive. What we have so far, um, and so far, what is not working so much in my favor, honestly, that I'm not a fan of, it is going to be how long they opened up this this credit card. I'm not a fan of this. So they opened it up in 2024. They don't even have 2 years just yet. And yeah, this is all bad. Okay, so right here. So let's work right here. So all these C's that you see, this is pretty much just telling us that they're current. They haven't missed a payment. Thank God, because that would even be more of a red flag, right? So as we can see through the C's, they're current. They're paying their shit on time. I'm like, okay, that's good. That's good. But it's not the only thing. You can have 700 credit score, be paying everything on time, and still get denied, right? So let's look through these so we can just start eliminating some stuff. So let's change the color of our pen. Let's lock in. Okay, so these this threes, we're not gonna count them against them. Why? Because those are authorized user. Ha! You didn't think we would catch you authorized users. We can tell when it's authorized users on the credit report. So, what does that mean when you're an authorized user? That means just you're just piggybacking off somebody else's credit, which is fine. But don't come over here trying to ask for money and trying to pass your credit like you put in this work, right? So that's pretty much what an authorized user is. Is pretty much someone else is letting you be reported on their credit card. It's pretty much a simple, easy explanation to do that. So we can easily already go ahead and eliminate these two loans. That makes our job a lot more easier. Why? Because we're not looking at the payment history because they're not paying these. They're not paying this Amex or this Chase card. So the only thing we need to then focus on is going to go ahead and be what is theirs, which it ends up being this one, Amex, Discover, and this Chase. That's what JPMCB stands for, and it's an auto, obviously, right? So that's what's theirs. So in reality, they've only had credit open, yeah, since, yeah, this is accurate. Because what tends to happen on our end, what we will see is that people have authorized user. We don't count that shit. We definitely do not count it. Just because you weren't really making the payments. There's a way around it, and if you want to find out, you gotta subscribe. I'll make a video about it of how to actually flip a authorized user so then you can get approved for a loan. Why? Because I'm the guy in the inside. I am a loan underwriter. This is what I do for a living. Shit. Oh, God, I love doing this. Oh, so much fun. So much fun. You guys have no idea how much fun I be having just breaking down these credit reports. Right? Okay, so right now, so let's take a look at. So she's asking for 5,000. It's unsecured. So unsecured pretty much means it's not like an auto. She stops paying, we can't it's not like we can do anything besides send her to court, right? So that means she just wants money free and clear. So let's switch up the color again. We're gonna distinguish what is an installment and what is a revolving. All right, so anything with CRC that you see on here, it is a credit card. Anything that's circled, AUT is an auto. So we see they have two unsecured loans, which are credit cards, and then a secured loan, which is an auto. All right, so they've been having this. We're focusing on their unsecured because that's what they want. So they've had this credit card for 14 months. That's beautiful. They barely just opened this up 4 months ago, and they already racked up 7,200. That's not beautiful. What the fuck are we doing? Oh my god. Wow, this is not how credit's supposed to be used. I'm sorry. I judge. This is actually part of my job. So me being candidly and blatant and honest, this is this is pretty much this doesn't read, you know, and I think and I think anybody that's looking at this and maybe saying, "Hey, don't be so harsh on her, this and that." I'm not trying to be I'm not trying to be. It's just it's a fact. That's what it is. That's really what it is. It's a fact. Right now, getting a credit card 4 months ago, and you already racked it up $7,200. That's wild. That is wild. You can't tell me that's not wild, right? So yeah, wow. So far, yep. I'm watching. I'm looking. Okay, so they opened this up. Thank God they're not in debt like this. Okay. All right, so they opened this up 14 months ago. They have this auto that's been open for 13 months. Beautiful, beautiful. They've been paying excellent. So we can at least see they're able to handle a 351 payment so far. So let's see what we have built so far. So let's look at the pros and the cons of this deal. So we have a person that's asking for 5,000. They've been a business owner for 5 years. They recently established credit. Um, they have 3 open loans, which is great. So not all of it is being authorized user. Oh, thank God, they're helping themselves. Um, they have pretty much they're over 50% utilized on their credit because again they have a total of 10,289. That's of their actual money. That is money that they can just spend. The other authorized users don't count. So she's at least 72% in the hole with credit utilization. That's bad. And especially it was 4 months. That's a huge red flag to us. It's like, why would we want to give you a loan if this is what you're going to do? Right? And again, I'm sorry to be so candidly and just this way. It's just, unfortunately, the way the things are and whatnot. So, yeah, sorry, not sorry. Oh, yeah, it's tough. It's tough. All right. Okay, so let's see if I move myself. Maybe make myself. And just to let you know, guys, I would have dead ass made my. I would have decisioned this loan a long time ago, but for the stream, come on, we gotta break it down. We're gonna also, teach you guys, so you guys can see how is it people on the inside are reviewing these loans. So, all right, let's continue going. Let's continue going. All right, stop fucking with it. What the fuck happened? Okay. All right, let me know if something happened to the stream. I don't think so, but we'll see. Anyway, okay, so they've been paying this for 13 months. So overall, positive. To me, what do you guys think? What do you guys? You think you think based off the credit, based off the employment history, that this person should get a loan? Put it in the comments. I actually want to see what people think. Oh, this is interesting. Non loan underwriters making underwriting decisions. That's funny. Okay, so let's take a look here. Okay, so you guys should be able to see it fine. Okay, so this is where I come in. This is where my decision is at. My decision is, unfortunately, she's not going to get approved. And this is why she's not going to get approved. It's a little sad to say, but this is part of my job. So the reason why she's not going to get approved, it's not because of her employment history. It's not because she's asking for a lot, because she's really not. She's asking for 5,000. It is her credit history and how much she owes in a short amount of time. This is not. This doesn't show us that she's not a risk. This is pretty much what is happening. She's just demonstrating that they are a risk. So it's like, why would we give you a loan if you're already shown that you're in debt and you can't pay? Because the thing is, like, it's okay if you owe money, but the thing is, how fast are you paying it off? Because that will gauge how much how much how financially savvy you are. Because again, you see how she has no balance on that Discover credit card of 3,000. That's how it's supposed to look like. She should have opened up this card and like have be under 30%. You know what they always say, be under 30%? Yeah. They needed to be under 30% in order for this to help them a lot more, because then it shows that they're responsible, right? Like, okay, we can push her through. So unfortunately, even a 700 credit score, you can even get declined. So as you can see, it. I'm so sorry. This is gonna be a tough call. This is gonna be a tough conversation to have with this client, but they'll get it. So essentially, this is what I would tell them. So they're not gonna get approved for nothing, pretty much, not even a counter. These people are not gonna get approved for a counter. So what is going to happen is they're gonna decline her. If they do approve her, it's gonna be maybe 500 bucks. Right now, she's too new to credit. She already owes too much, and based off that Amex credit card that was opened 4 months ago, yeah, like that just that will turn away 80 to 90% of the lenders, just because it's like, wow, you opened up 4 months ago and you already boom owe 7,200. Yeah. So essentially, this is what needs to happen. All right, let's go black marker on them. Let's go black on their ass. All right, so this right here, this needs to be lowered down to 30%. They need at least 10 months. They need to at least have 2 years right here. Stop opening up accounts, because that's going to show that you are risky and that you're applying. The inquiries really weren't that bad. The reason why I didn't even bring them up is because they weren't concerning. But the inquiries, she's only gotten one last year, and then that's when she started applying a lot in a couple of years. So yeah. So if they just do that and just continue paying on time, at least get this to at least 1 year, so they can see that she can handle anything at 5,000, because that's also a strategy that she wants to do. With having the 7,200, she's gonna want to show that she can handle 5,000. This auto loan's gonna help because that at least establishes that she's able to handle a $350 payment. With this, I would say 6 months to a maybe a year, she can get approved. Why that long? You're like, damn, I gotta wait that long. Yeah, it really it depends. She makes 90,000. It really depends on how fast she can bring down that credit utilization. That's a hurdle right there in itself. Right? She has to be able to bring that down to at least 30%, which ends up being like $1,500, I think. Let me see. What is it? 7,289. How you find this out is you do your credit limit times uh, the limit you can exceed, which is 30%. So you do the credit limit times 30% equals, that was kind of close, $2,186. That's how much she needs to bring down the balance, and I'll have her at a 30%. We'll be like, okay, she's good. Like bringing it to 50 or 40%, no, it kind of tells us you rely a little bit heavy on credit, which means that you do not know how to administer your finance. Sorry, I do not make the rules. I just enforce them, gang. Let's go. Oh shit. Hopefully this mic wasn't off. Ooh. Uh. Ooh. Okay, yeah. So anyway, but um, yeah, I just wanted you guys to see how this process is and how people get approved. So, this is what we're going to do now. We're going to react to a financial manager that works inside a dealership and gives you advice on how to get approved for a Porsche. Again, I'm a loan underwriter. I will review his loans and let you know um, if he's giving you all the game and if he's being transparent with you, because I'm being transparent with you. So if he's not at least at my level, we not doing it, gang. So let's hop into this. This was fun. Hopefully you guys learned. If you guys have any questions, remember put them in the chat. I'm here for you guys. We're gonna try to do these live every Sunday or whenever I do get clients to go ahead and be able to help for this. But let's go ahead and react to this video. Okay. We're gonna throw this on. We're gonna make it a little fast. We're gonna go 1.25. Because I don't want this video to be really long. We can go 130. Alright, let's see here. Alright.
Greetings, Downpipe community. Thanks again for joining us. Today, I am here at Atlanta Porsche Northwest in Atlanta, Georgia. And my guest today that I have is the finance manager, Rick Robbins. Rick, appreciate you taking the time and talking with us today.
Absolutely.
So, Rick, what's your background?
So I'm from Charlotte, North Carolina. I moved to Atlanta in 2007. I've been in the automotive industry since 2007.
Okay.
I've been here since then. I was with Mercedes, did Mercedes for 12 years. Learned almost all the nuts and bolts of the automotive business with Mercedes. Excelled in a few different positions. Left there in 2018. Came here with Hennessy in 2018, my apologies. And around that time, I was a finance manager for about a year and a half at Land Rover Buckhead. Accelerated there and moved on to Land Rover Gwinnett as finance director there.
Okay.
Was there for about 5 years. I really wanted to get back into German engineering.
Okay.
And this was a new point that was literally right around the corner from my house.
Oh, that's perfect.
And I said, this is an opportunity for me to get back in the door with German engineering. So here I am today now, finance director here at Porsche Northwest.
All right, that's awesome, man. That's awesome.
Absolutely.
Yeah. So what I want to chat with you about. So I'm sure you probably see it all the time. You got the person that comes in and they want the 911. I know the Macan you can go get, and the Cayenne you can get, but that 911 is something that's a little bit special. It's not an everyday car. I know you got to get the allocation and everything. So for a person that's coming in here and they want to, let's say, they're ready to get that 911. What are some things you would say? What are the basics? Like you got to come in here with this first.
Well, from a finance perspective, there's a few things that obviously you need to have.
Okay.
We do ask that, in some instances, hey, look, can you maybe finance with us? Can you do that with us to not only help us with, Porsche Financial Services or whatnot, but, to add to the luster of the deal, what I mean? So obviously from the finance perspective.
So the first thing out his mouth is, how can you help us? Wow. So it's not about him helping you, but about you helping him. It's not, okay, hey, come in with this down payment. Come in with owning a Porsche before. Come in with knowing exactly which Porsche you want, right? Well, I guess in this case, we're talking about the 911, right? Those cars are like, depending on the year, if you get a brand new one, you can look, I think, up to 400,000, but not just anybody can buy them, right? So this guy, he's not even starting off on the right foot. So that's it. But again, I could be judged. I could judge too soon. Let's remember, you watching this with me. So let's take a look.
Perspective. We want to make sure that you're, in a decent range, somewhere between, 700 to 800, somewhere in that ballpark from a finance perspective.
How much money do I got to have to put down when I'm buying a 911?
Whoa, I missed something important.
From the finance perspective, we want to make sure that you're, in a decent range, somewhere between, 700 to 800, somewhere in that ballpark from a finance perspective.
How much money do I got to have to put down when I'm buying a 911?
It really all depends on you as an individual. individual. You could be an individual that's had a certain spend with certain banks, and hey, look, if you spent 150, if you spent 200 before with certain banks, you may not have to put anything down.
Oh,
Also, it depends on loan to value. What
Okay.
that car is worth against what you're asking to borrow.
Okay.
There's a few different factors. So sometimes, hey, look, you could come in and buy a $300,000 car and not put anything down. Okay. Sometimes you can come in and you might have to put $100,000 down.
Okay.
It all depends on the structure of the deal.
Okay.
And the individual.
And the individual. Okay.
That's what I like to hear. That is, he's off. Okay, he was going left. Now he's going the right way. Oh my God. Okay, he is right. So let me break down what he means. So he's saying, so when he says you've spent 200 with the bank or 100, pretty much he's saying that you finance auto loans at that caliber. So he's saying have a credit score between 7 to 800. That will help. But I have approved people that have been in the 600, but they're the minority. They're the exception, not the rule. But I do want you to know that it is possible. You just gotta check with me first, because again, I have a lending authority of 100,000 where I can approve loans up to 100,000 for secured collateral. So I have a very good understanding when it comes to approving these type of loans. Um, so yeah, so that's great. So 7 to 800 range. Down payment will matter even at a 700 credit score. I know, guys. Yes, because again, if you're jumping into this where you've never had it, and especially in this economy, the problem is that this economy financially is not good. So most likely you're gonna have to put at least, I would say, the minimum. You're gonna have to start putting down 10%. I know there are some people that specialize in this type of industry. This is theirs. They work a little bit better, but when you're at a credit union or a bank, expect at least 10% of a down payment. Don't expect anything less when it comes to these $100,000 loans. Look, there was someone I ended up approving somebody. Um, they actually ended up paying off a I think it was like 110,000 auto loan with us just in January. He was trading that in and getting another Porsche. It was gonna run him about 200,000. I think like a 2023 or some BS like that. And he was putting down, sorry, no, 400,000, and he was putting down up to at least 200,000. He already had 100,000 before. He's paid off multiple loans. His score was like close to 800. He was making like I think $10,000 to $14,000 a month. So he had the
2,000 to them in their mind they can, but you see, so you going to looking a bit further. And now, is there ever a time where you gotta, hey, before you jump to this, maybe start here with this one or get a used one versus trying to go new or
Depending on the client. Like, let's say, for instance, if you're an individual that comes in here and you're making, let's say, low six figures. All
Okay.
right? Low six figures, 100 to 200 grand a year.
Okay.
All right, and you want to buy a GT3 RS that may be available. All right,
Okay.
on the showroom floor. Okay,
and that's going to run about 300.
yeah, that's a
right?
$300,000
Okay.
car. So that's just going to take some basic mathematics. All right, you know what I'm saying? My debt to income. All right,
That's
my
true.
payment to income ain't gonna make a lot of sense. You know what I'm saying? So you got to kind of break that down to them and let them know, hey, look. If we're looking at a car like this, I know that you might be able to make that payment for 3 to 6 months, but can you make it for the whole 72? You know what I mean? You know what I mean? So banks now are tightening down. So they want.
All right, let's break. Yeah, this is very common for people trying to get like a starter home and be like, yeah, I could pay a starter home for 7 years. Yeah, like he's making a lot of sense. This isn't something you pay 3 to 6 months from now. This is something you pay for 6 years, 7 years, 8 years, sometimes even 9, depending if they offer it, right? A 9-year loan. Whew, that's crazy. Um, what the other guy with the hoodie, what he's explaining is the loan comparable. What I talked about before, like before you jump to a $300,000 car, you have to go through the hoops for the other ones. Without it, it's going to be really, really, really tough for you to get approved for a loan at 300,000 unless you're not coming down with like more than 20%. If you never had experience with a $300,000 car, I'm going to tell you 8 out of 10 times they're going to fucking tell you no. Why? Because you don't have the credit for it. You may have the income for it, but you don't have the credit, which is what's important. So that's what he's explaining. And then also debt to income. If you don't know what debt to income is, it's pretty much all your debts of your monthly payments on your credit report divided by your income. It's a percentage. You don't ever want to be past 40%. For mortgages, it's like 43%. So, um, but lenders will give you a loan for 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 300,000, right? But it has to be in the right structure. So that is essentially what he has said so far with the debt to income. Because with the debt to income, it's like that's why he said like I need you to be able to make this for 72 months, which is 6 years. He needs you to be able to make more than just 6 months worth of payment, right? Especially if you're paying him one time a month, you see how important that can be. Okay, he doing something. He not doing nothing like, oh wow. The only reason why I can say is because again, this is me. I'm interpreting what he is saying as someone that's been doing this for 15 years. Um, I understand what he's saying. I can see the nuance and then be able to explain it. But if it was just you, do you know what he said? Do you know what he means when he says, when he said the comment about like, with the banks, 200, 300, debt to income, your your loan to value, like are you familiar with that? Like loan to value is another aspect because if you're putting too much, let's say if you just want to put down $1,000 for a Porsche, they ain't gonna approve you with that. It doesn't matter how much money you make. It matters if you've had the credit before, what your debt to income is, what the loan to value is, and how much you're putting down. That will, if you definitely get locked in for a supercar, it's gonna be that exactly. So that's we're going. Let's continue. And I was like, so far, he's providing surface level information that you've seen already there through the internet. Debt to income, everyone knows what debt to income is. Everyone knows what loan to value is. So let's continue.
Want to see liquidity. Okay. So they may ask for bank statements. They may ask, hey, look, we need a little bit more income. Can he prove more? Can he put himself in a position to hold on to this kind of debt for this long period of time? Okay.
What I just say. So to the normies out there, so pretty much what he is saying is, so he says, can you provide bank statements? Can you show a little bit more income? That's already telling me they're running into a debt to income problem, and they're running into what is called a PTI problem, a payment to income problem. When you finance with the dealerships, they have a different type of lending structure. There's something that's called PTI, which is payment to income, which pretty much they grab your monthly income, your gross, before taxes are taken out, and what they do is they add a percentage to it. Where I've worked at, they didn't want you to pass 15%. So essentially, let's make this easy. So if you had $100, 15% of 100 would be $15. So obviously, no bank would really give you a payment for $15, right? So if we're doing something around 100,000, then that means that 15% of that would be a $15,000 payment. But no lender's going to give you a $15,000 payment. It's just so, you can easily understand it. That's why I did it that way. So I guess if we did 10,000, right? That's more realistic. 10,000 times 15. They don't want you to have more than um, oh, is that 150? I think it is. It's either 1,150 or 150. One of those. My math is a little off right now. Give me a moment. Well, I guess that would be based off the loan amount. That's why I was confusing myself. No wonder. Oh my fucking Tell no one. Tell no one. I will deny this, even though there's proof. Hell no. Oh my god. So they grab your income well, it's still so. Even if someone was making $10,000 a month, the average person in the United States makes, I think it's like, let's just say 50,000. 50,000 divided by 12, that's 4,166. So if we did that times 15%, they don't want to give you a payment more than $624. So that is what he is referring to when he says, "Oh, can you show a little bit more income?" That's what PTI. That's a PTI answer right there. And then DTI for bank statements. But also more income could be the DTI also, right? Let's say if he reveals a little bit more.
So it's not like how it was where it seemed like you get one, you get one, you get one.
No, it is no more of, and it was a lot of that because I was around in that time from, let's say around, you remember 2008 when we had the recession,
yes.
You know what I mean? At that moment in time, before 2008, everybody was riding. Everybody was riding. Interest rates were sky high. It was a different beast.
Okay.
Now banks have really tightened up the metrics.
Okay.
And not everybody can ride.
Okay.
Not everybody can ride. They are definitely taking a little bit more in-depth look, so to speak, at these clients today.
Okay. So for.
All right, normies, boom. What that means is now, like I told you earlier, if you were here in the stream before, I said that the economy is not going good, and this video was done 4 months ago. So not everyone's going to be able to get approved for a Porsche or a high limit auto loan like today. Not today. Yesterday. Yes, someone went in applying for a $79,000 loans. They just got opened their first credit card through Chase, keep in mind. Oh my god, for $61,000 is what they gave them for an auto loan. Could never be me. Like, it was very aggressive. They put down that they were self-employed, but they were going for $79 and they wanted to trade that in. I was like, hell no, decline. Like, even though Chase gave you a $61,000 auto, if you don't have any other autos that you've paid before, and this is their first one, and you're thinking that I'm gonna give you $79,000 for a brand new one, even though you're trading, you're fucking insane. Not gonna happen. Sorry, that's just how it is. Maybe Chase will. You can chase your ass over there, right? But with Chase, the reason why they're able to do that is because they're a bigger bank, right? So the more money you have, the more risk you can take, and that was a risk they were willing to take. So you see how, like, the economy, and it just wasn't that. There was somebody else. They had 5 autos. One of them was like, I think they had one 143,000, and then they had another one that they recently opened that was 90,000. They're trying to come in for another 100,000 and trade in one of their $20,000 autos. I was like, get the fuck out of here. We're not doing this. Not today, gang. And this was them financing to the dealership, right? Because I work both for the lender through the dealership and actually directly through the financial institution, right? So, yeah, pack it up. So the economy is not good to get these cars. I was like, if you've never had it before, you're gonna have to save more money. I'm telling. That's really what is going to save you. Your down payment is going to save you if you're trying to get these high auto loans. All right, let's get back to this video. I've done enough yapping.
For a client. So if I'm a new person coming in here, so for viewers that are out here trying to ready to go make that first purchase, they need to make sure they may not have the need to have money down if they got at least a substantial income and their debt to income is low.
Yeah, and if you don't have substantial income, let's say for instance, you have someone that's retired.
Okay.
Because I do deal with a lot of clients that are retired.
Okay.
Individuals that just don't work. But you know what? They're cash heavy. All right.
Okay.
Or they're investment bankers or whatever. They could be doing crypto. Okay.
Right.
What's going to be advantageous for an individual like that is to come to the table with a large lump sum of capital to show the bank that, hey, look, there is some stability.
What I say, capital, capped income. They can no longer make more. So whatever they're getting paid in retirement, that's it. So once you stop, and that happens to you, then yeah, gang, pack it up. Like it's gonna be a lot harder. You're gonna have to put more money down just to get it, and you waited all this time until you're retired to get this loan. This is why I be having the cars I be having, because I'm just like, hey, I don't want to have to wait until I am old to drive these cars. I'm gonna drive this shit now. All right, let's hop back into it.
Here, we do have an individual that has a strong credit score with a little bit of background that gives them a good track record.
Okay.
And then we can kind of make a case for them, because you got to look at it like this. I am essentially your lawyer.
Okay. Okay.
All right. And the bank is the judge.
Gotcha.
So it's up to me to sit around and hold court with them and essentially represent you, because they can't see you, but guess what they do know?
They know you. Okay.
You know what I mean? And the bank does really depend on relationships with their dealerships and their individuals inside of these dealerships.
Okay.
You know, they want to know that they're dealing with, you know, upstanding individuals that know how to read credit, to read individuals.
Okay.
And it's all about relationships.
Okay.
And our track records.
Right.
You know, if we're in the business of having a ton of repos on our record, that's not going to look good, you know, when it's time to go to the bank and get things done, because they're going to question our credibility.
So now you bring a point. So if
Let me tell you, that's fucking, to a certain degree, it is cap. Maybe a little bit more with, not even the luxury ones, because even at the lender that I work with, we work with luxury dealerships that have Porsches and G classes and Mercedes and BMWs, Ferraris, Lamborghinis, and they always don't send us the cream of the crop. They don't. It's like, with the dealerships, they try to keep, like, if they have in-house financing, they try to keep those people with them, because, like you said, it makes them look really good. And then the trash ones, they will send them to the lender. So I will get, I want to say it's rare, but if I had to say what credit score range more falls, I would say credit repair. I'm gonna say lower 700s. They like to keep a lot of their 700, their mid and 800 credit scores and 900 credit scores with Porsche, and send us the trash ones. So he's right, yes and no. It's just the way that he's seeing it and manipulating it, because when it comes to the dealership, if they want allocation, which means buying vehicles, as he said, like in the beginning of the video, they gotta be able to show the people that they send through finance that they're gonna be able to pay down these loans. That's why it's so important. So, yeah, that's it. Let me know if you guys have any questions. Let's continue.
if you approve someone and they look good on paper, but then you have too many of them that, hey, he got repoed or he got repoed, that comes back on you.
They're going to take that into heavy consideration when considering getting a deal done for you. Absolutely. A bank is going to definitely look at your track record. And that's one thing that I have been able to stand on for so long in my career, 7 years in finance. I am pretty good at reading a client, getting all the necessary data to make sure that, you know what, I've got a real human being that's gonna take care of this bank.
Make sure
and make sure that they're gonna continue to come back and do business in the right and favorable way.
Okay.
You know what I mean?
Okay, now that's something I didn't realize, that if somebody else gets their stuff repoed, whatever, that can come back.
Absolutely. A bank will take a look at the end of the year at your repo record and take that into consideration. So I pride myself on having a very low.
Okay. Now, what percentage would be low? Where's is that 10%, 5%?
I would like to be under 5%.
Under 5%.
Yeah,
okay.
Yeah. You know, if probably even lower than that. Let's say 2 to 3.
Okay.
Yeah, because if you're selling, 100 cars a month, and that's 1,200 cars a year, you don't want 120 cars to get repoed.
Oh, that's okay.
Or first payment defaults. Okay.
Right.
You may want to see maybe 1 a quarter. Okay. You want to have a very
so about 4 out of that.
Yeah.
You want less than 1% that it's.
You want to have a very good looking record with the bank. Okay, absolutely.
Now, how many banks do you work with? On
right now, I have about 10 to 12 banks. Yeah.
Okay.
And we've got we actually have a deck of cards that can cater to all individuals.
Okay.
From a 500 credit score all the way up to an 875 Beacon score. There's a ton of individual banks that I deal with. I deal with everybody. It's a large spectrum.
Okay.
Yeah.
So now, if I hear you right, if John comes in with a 500 credit score, there's a chance you got a bank that can get him in
Absolutely.
a 911. Maybe not a 911.
maybe not the 911.
You might have to go with the Macan or something.
Yeah, he may need to start out with a Macan or maybe that 2015 911.
Okay.
All right? Something that's favorable to his payment to income.
Okay.
His debt to income. All right. But he might not be riding a.
You heard that? Debt to income, payment to income. Debt to income, payment to income. The only thing he didn't say was what were those thresholds. Okay, payment to income, but what's the percentage? Is it 10, 5, 20, 25? What about debt to income? Is it 50, 55? These are things that he's not saying. He's giving you breadcrumbs that he already picked up from somebody else. Everyone knows about you can't have a high debt to income. You can't have a high, not maybe a payment to income. I think that may be new for a lot of people, but like he's not giving. He is, think of it like if you're walking and looking for direction, he points at the direction. He doesn't tell you, hey, it's over there around like 5 blocks down. You're gonna make a left and then a right again. If you pass this grocery store, you've gone too late. He's not breaking it down like that. Exactly. Or like how I did when I reviewed this person's credit report. Right? He's doing what a salesman does. Am I wrong?
He or she may not be riding in a 25 or 26.
Okay, he ain't getting to do it. And don't even look at the GT3.
Right.
Okay.
Okay. That's a conversation that you got to have sometimes with individuals. And they understand it if you can sit down and just explain it to them that way. You know what I mean? And you don't have to be condescending.
Right.
You educate individuals. Right. That's one thing that I like about this job. I'm educating people too at the same time. I'm not selling. I'm honestly educating you every day. Okay. It just so happens that this vehicle, this brand, is in between.
Sorry, I gotta call out the bullshit. You would not be working there if you were not getting paid. Get the fuck out of here. Like, I understand like the passion. Like with me, I love where I work for one, but then two, I love what I do. Right? The money is a byproduct of that. So with him, he's a salesman. Majority of them like money. If they could educate someone, the only reason why they would educate somebody is to get them be like, hey, we're gonna put you in on this 2015 Porsche Macan, like he said. Oh, not Macan, or GT3S. Come back in a couple of years and then reapply so he can get some more money. Of course, that's the only reason why he would want them. That's why he would like them to educate him, because of that reason. I think it's very strong because he can just buy him on another car because it's like, you're not ready quite yet for the new GT3. Let's start off with the 2015 we have here, and then let's work our way up, right? So that's essentially what, to cut out the bullshit that he's saying. That's pretty much it. All right, let's get back to it.
Between that.
Okay.
Yeah.
Okay. Now going, so once we done got finance, let's take it a little step further. We done got finance, and now there's that part where if you listen to Dave Ramsey, he's like, this is the part where, you got two deals in a car deal. You got the salesperson, then you got the finance guy. So once they get through all right, we pick the car out, they come to you. So you're what, quote unquote, is the second part of the deal that you got to sit there. You're the last stop.
Yeah.
Okay. So what going into, I would say like different kind of things. I know you offer services. And so if you get on any kind of car buying guide, just say no to everything. What they're going to offer you.
You're Clark Howard.
You're Clark Howard. Yes.
Yeah. So you do have what we call it.
All right. I think that's pretty much the rest of it. Let me know if you want to watch the full video. I'll put the link. It it was a good video. It was a good video. I'm not gonna sit here and say that it was a bad one. It was definitely good. It's just he did not give. Did you end up leaving this video learning how to finance a Porsche? I think it's no. So again, let's talk about what he talked about. So he talked about in a very indirect way loan comparables. So making sure that if you're gonna come for a $300,000 car, you've had these certain loans amount. This is me breaking down. This is me from the information I picked up from his video that I'm able to explain it this easily to you, right? And this is me giving you the secrets through his indirect bullshit, right? So he pretty much says if you've had those type of loans in the past, it'll be easier for you to get approved if you have a down payment anything over 20%. It is always great. What'll be golden if you're about 30 to 40% of a down payment, that would be golden. 50%, it's kind of overdoing it, but if you're really trying to prove a point, you can always do 50% down. He didn't talk about loan to value, where you want to be. The lenders normally don't want to be over 100%, or they want to be really close to 100% as possible. When it comes to loan to value, your payment to income, they normally don't want it passing 10%. So, because when I worked at a when I worked only strictly at a dealership approving loans, they cared more about that. My lender doesn't care as much about it, but um, yeah. So sorry, I just got distracted watching this other guy that I watch on YouTube. We'll probably do a video on him. He explained he went briefly over that. Let me see what else he said. I think that was pretty much it. Like this is what he was. I didn't hear about people that have bad credit. Okay, if you're in a bad credit and you recently, they talked about the repos, but they didn't get in depth. If you have a repo recently and you're trying to get a $300,000 car, don't even get the fuck out of here. You're definitely not going to improve. I'll definitely tell you that right now. Next, he didn't talk about the actual down payment percentage. He didn't talk about the DT, debt to income. What's the max debt to income you can have? The max payment to income you can have. Who are the banks you work with? You see, these are a lot of secrets he did not spill, and I had to let you know because yeah, what's the minimum income? Because again, you can have everything. You have the down payment, the credit, but if you don't have the income, where you at? So yeah, this one I rate this video like about a C. Honestly, there's a lot of information you just get out there. He didn't give you anything to really be like, oh, okay, I know how to for sure to get a Porsche. I didn't leave that learning this, and this is me trying to be somebody that's not in my position. So yeah, huh? Interesting. All right. Well, hey, again, if you need help with your credit or getting a loan, contact me at George the Credit Expert at gmail.com. And stay tuned for the next video. We'll react over another client's credit that they're trying to get a loan. And see you guys next time.